Okay, welcome to the Valutrades webinar on MT4 for beginners. We want to welcome everyone. I'm going to ask you to send any questions you have to Penelope, who's moderating the session, and we'll have a question and answer after we're finished. It'll take about an hour to go through. You can see on the screen now that we have a very intimidating looking MT4 chart that you may see when you first open up your platform. We're going to make that look a lot less intimidating, and we'll have some fun. Just so you know, my name is Brad Alexander. I work for Valutrades on a variety of projects. I do the market blast every Tuesday morning, and I do some education and provide a lot of videos. I've been working with a variety of brokers, educators, and platform providers for years making videos, and I'm a trader. I am a retail trader and a professional trader, and I've been exactly where you are, trying to understand what to do with all these wonderful tools and make some money in the forex business. But before we do that, we need to remind you that CFDs and FXs are complex projects or instruments, and they come with a high level of risk if you're not careful due to leverage. You should carefully consider your risk appetite and your investment objectives before trading FX. So what we want to do today is take a look at the MT4 platform, and we're going to cover a few different things. I'll give you an overall tour of MT4, look at the different areas, and I want to look at a basic setup. Many questions come through asking, how do we change the colors? Why is it looking so complicated? Well, we're going to make it much, much simpler before we get started. Okay, we want to look at candlesticks and time frames. That will be obvious as we get going, and how to read the charts. We want to look at making chart templates. You don't want to be recreating a chart every time you want to trade. And when you're watching one particular asset, let's say you only like to trade euro dollar, you need to be able to look at multiple time frames and save all these as profiles, and I'll explain that as we go along. MT4 has this thing called crosshairs, and it's used to measure various parts of the chart. And one of the most important things you'll ever learn is drawing support and resistance lines. Simply a horizontal line that can be done in MT4 quite easily, and you should be using these day by day, hour by hour if you're trading. Next, we'll look at trend lines. We'll go through some indicators. We could spend hours and hours on indicators, but we'll just do a few today. We're having another webinar at the end of November to look at indicators specifically. And we want to look at the types of orders you can place when you're trading. So this was billed as an MT4, MT5 webinar, and one of the things I want to do is to look at MT5. But if you understand the basics of MT4, you'll be fine with MT5. There is one particular thing that I really like about MT5, and I'll show that to you, but you'll have to go through the whole webinar to see it, so we'll do that at the end. Anyway, let's get going. So when you first load up MT4, it looks like this, and it looks a bit intimidating, doesn't it? This is the way it comes from the manufacturer, from MetaQuotes, who create MT4. So what I want to do is to make it look a lot more palatable. So here we have an array of 4 different charts. Like any Windows program, you can get rid of the elements just by simply clicking the X. So I'm going to eliminate some of these charts. And we can simply drag and resize the chart as we go, or we can click. Okay, so now we have a full-size chart. I'm going to make this look a little nicer in a few minutes. Let's go through MT4 as a platform itself. On the top left, we have basically the name of your server. In this case, it's the Valutrades demo server, your account number. Always check, if you have multiple accounts, always check to see that you're trading in your demo or your live account. It would not be the first time if someone accidentally placed a trade on the wrong account. We see the instrument we're trading. In this case, it's dollar Swiss on the 30-minute chart. Here we have typical windows set up with file, view, insert, and some tools. We'll go through these in more detail later. Here we have an array of tools and graphic tools, and we also have our time frames, which we will go through a little bit later. On the left side, we have a thing called Market Watch. This is where we have all of the tradable instruments that we want to use in our lives. And down below, we have the Navigator. The Navigator basically tells you quite a few things. It has the list of all of the accounts you have open or can have open. It has a list of indicators that you can use. And we have other things like EAs and scripts, which we'll get into in later webinars. Down below, we have the terminal, which shows you everything you want to know about your account. Your balance that you have. This is a brand new demo account, so it has 10,000 pounds of equity in it, and the margin available. So as you make trades, and I'll show that to you in a little while, you'll see them down here. Your account history is available. You can go on to a thing called Codebase and download thousands of different indicators, but we'll cover that in a different webinar. And something very important that people overlook, down in the right-hand side corner, if you don't see figures here, you may not be connected to the internet. You may see something like invalid account or no connection. It's important that you see figures here and that they're moving. Then you know you are connected to the internet. Okay, getting back to the actual chart area. As I said, we are looking right now at a dollar Swiss chart on the 4-hour time frame. If you don't know about base and quote currency, they're listed. The base currency is on the left and the quote currency is on the right. So here we have prices down the right side of the quote currency. And that will be the same for every pair that you look at. To make this chart look a little prettier, we can right-click on the chart and we see a variety of commands. We go to Properties, and here we have everything we need to do to change the chart. So what we're going to do, I'm going to make this into a white background. I want the foreground to be black. My grid is fine, leave it at gray. I want the bar up to be darker green. I want the bar down to be red. Bull candle to be darker green, and a bear candle to be red. And I'll leave the rest as it is. So here we have a white background with green bull candles and red bear candles. It's still quite busy. So I'm going to right-click again, and I'm going to see a thing called Indicator List. And I'm simply going to get rid of everything. Delete everything I see. Okay, now we have what we call a naked chart. You may want more than this. You may want to make different colors, but I'm going to stick with this for now. Candlesticks are not the only way to display a chart. You can use bar charts or a line graph. But I'd say that 90% of traders or 99% of traders use candlesticks, and you'll find that that is the norm. Okay, let's say that we like the configuration of this chart, and we want that every time we open a chart, it should look like this. So we simply go to Template, Save Template, and we have a variety of templates we can save to. What I want to do in this case, though, is to save it as default. You may have to type in the word default. It may not be there. So I've now saved it. So basically, every time I open a new chart, it will have this same configuration. And how do we open a new chart? Well, there are many ways to do that. Here we have a chart on dollar Swiss. So let's say I want to see another chart on pound dollar. I can right-click on in the Market Watch on pound dollar, open chart window. And here we have the exact same chart with the pound dollar chart with the exact same configuration. A naked chart with no indicators. And I can turn off the one-click trading if I like for now. Okay. You may be wondering why you've got a broker account and you don't see all the instruments you can trade. Simply right-click on Market Watch and select Show All. So now you can see all of the tradable instruments that you have. And if you have a new retail trading account, chances are you'll be trading with all these symbols that end in the letter V. These are the lower leverage retail trading instruments. And you can see we have quite a few. Okay, down below, we can see that we have two charts open. We have dollar Swiss and we have pound dollar. If I want to see both of them at the same time, I can simply click on a tile button and we can now see both at the same time. So let's just work with one for now. Okay, again, here we have pound dollar, or cable as we call it, and we're looking at what we call a 4-hour chart. Here I'm going to shift to a daily chart. What that means is that every candle on this chart represents 1 day of price action. So this would basically be today's price action, as you can see over here on the right-hand side. So price opened at around $1.27, 0.278. It went as high as $1.2809. It went as low as 1.269. And right now it's hovering around 1.27. So that is basically how a candle works. And here we are on the daily chart. If you want to see it close up, you can simply click the zoom in button and get a better look at it. So again, these are daily candles, open, close, high, low. Here we have on our chart, every MT4 chart has open, high, low, close displayed on the top left next to the instrument you're trading. So again, daily candle, here's today, yesterday, the day before, and you can go along the bottom of the chart and see which days you're trading. So here we're going all the way back to August of 2018. So we have an entire season of trading going on here on pound dollar. So we'll zoom out again. You can use this icon up here to zoom in and out, or you can use your right click on the chart to zoom in and zoom out. If we click on the 1 hour, we're looking at a 1-hour chart, which means that each candle represents 1 hour of price action. So here we have the candle we're trading now. We're looking at right now as in a real time. So 1 hour, 2 hour, 3 hour, 4 hour, 5 hours behind. So basically 24 hours, 24 candles would be 1 full day. We can go down to 1 minute. If you're a new trader, I'd recommend not trading the 1 minute time frame. So basically we're looking at, you can see the price is moving a little more rapidly because 1 minute is a very short period of time to be watching price. So essentially 60 candles would be 1 hour. So what we can do now is set up a variety of different times on the same instrument. So we're looking at cable, pound dollar. So let's put some more of these on the chart. We'll just scroll up through our market watch and find it. Of course, it would be good if I could find it. Tell you what, let's try Aussie dollar. So I drag one onto the chart, but I want to load up more. So I'm going to right click. So now I have 4 Aussie dollar charts available. So let's get rid of the one-click trading. We'll look at that later. Okay, I want to take a look right now at multiple time frames. So here we have again Aussie dollar. So let's call this one, change this one to 15 minutes. We'll change this one to 1 hour. And we'll change this one to 1 day. And we'll change this one to, let's say, 5 minutes. So now we have the exact same pair, Aussie dollar, on the daily chart, the 1 hour chart, the 15-minute chart, and the 5-minute chart. This is very important if you're looking for trends. Let's say, for example, you want to trade the 1 hour chart, but you want to see which way the trend is going. You can look back at the daily chart and see which way the trend is going. In this case, it's dollar is getting stronger, so the Aussie dollar chart is going down. I can easily change this to a different time frame. So now we have 15-minute, 30-minute, 1 hour, and daily. Let's say you want to rearrange the order of these. You can simply do this by dragging the tabs at the bottom. So I want to put the daily chart last, the 15-minute first, the 30-minute second, and then I just refresh with the tile button. Okay, so we changed the order, 15-minute, 30-minute, 1 hour, and the daily. Let's say I wanted to save all these to look at later. What we do is call a profile. MT4 saves profiles very nicely. So I'm going to save this profile and call it Aussie dollar, multi-time frame. Okay, I've saved that. So down below we can see where it says Aussie dollar multi-time frame. So let's say we go somewhere else. Let's say we're looking for, go to our Euro profile. And later I want to come back to my Aussie dollar multi-time frame. There it is there. And it comes back to exactly as we left it. I personally use a lot of profiles. You can see all these listed here. I use them for a variety of things. If I want to watch simply the US majors, I've got a US major profile. So it's got Euro dollar, Pound dollar, Kiwi dollar, Dollar Swiss, Aussie dollar, and Dollar CAD. So I can see all the US majors at one time. And these are all on the 4-hour chart. Another profile, for example, here I've got one called gold. And that basically has, right now, one chart. So let's go back to our Aussie multi-time frame. You can easily, if you want to take a look, let's say we want to take a look at just one chart, it's very easy to simply drag it and make it larger. Then you can do whatever you want with it. If you want to scroll back, watch what happens when I scroll back. It snaps back to place. It goes back to the very beginning. If I want to scroll back and take a look in time, I need to turn, oops, sorry. I need to turn off the auto scrolling button. Auto scrolling is now turned off. I can scroll back as far as I want. And this is very important if you're back testing. If you're looking for certain chart patterns, you're looking for certain areas where a trend line might have been or Fibonacci, you can easily scroll back. If you want to go back to the beginning, simply turn back on the auto scrolling, and there we are back to the beginning. If you need a bit more space to the right-hand side, just use the Shift-N button, and there you have it. And in a little while, I'll show you why this is important. To rearrange your chart, simply go back to the tile button. If you want to see different arrays, you can tile horizontally, which may not be useful. You can tile vertically, or you can simply tile the windows as you want. You can also cascade, and this is valuable if you want to get rid of a lot of charts at a short period of time. So we'll go back to tile. Okay, one of the things that's very valuable at MT4, and it's very easy to use, is called the crosshairs. You can find it here, and now you can see you have a crosshair, or I want to get rid of it, just right click, or I could hit my mouse wheel, which gives me instant access to the crosshairs. So what this does, I can pinpoint any period in time, and down below I can see the exact time that that candle occurred. I can see the exact price on the right-hand side where the position is. But very importantly, if I want to measure, I simply hold down the left mouse button and I can drag and we'll see figures. So the figure on the left, which says 15, that means 15 candles. So if I keep dragging, now we're looking at 44 candles. So in this case, it's the daily chart. From point A to this point here is 44 days. Or in this case, it's 101 days. The middle figure is points, or you'll learn about pips. In this case, we're dragging it from the high point down to a low point, and we see that this is 358 pips. If I want to go the entire span of the chart, I can put the crosshairs on the very tip top of the swing high, go down to the lowest price, and I can say that price has moved 898 pips from top to bottom. Okay. The very right figure is the price. So wherever the crosshair is, in this case, it's $0.74 to the Australian dollar, being the quote currency in dollars. Okay. One of the things that we need to really take a serious look at is how to draw lines and on the charts. And the most important line you'll ever learn, the most important indicator you'll ever find is the horizontal line. And I'm going to show you why. Horizontal line can be found right here. And you simply drag it and place it wherever you want. So what I'm doing right now, I'm dragging it to the very bottom of the chart, and I'm creating a line of support. I can actually change the color of that by double-clicking on it. You can barely see this, but there are now two small boxes on the line. I can now move the line if I want. But more importantly, I can go right-click on it, go to Horizontal Line Properties. I can change the color, change it to red, much easier to see. So now we have a red line. And I can double-click again, and the line loses its small boxes, and I can't move it. So let's draw some more. So here we have a line of resistance. So we're finding the swing high at the very tip top of this chart. So we know that when price comes back to this line, it may have a hard time getting through. But we'll have other lessons on support and resistance and how to trade these later. If I go to my 4-hour chart, we can see that the line is still there. So no matter which chart I go to, which time frame I go to, that line of support will be there. So if we go back to our 4-hour chart, we can draw as many lines as we want. And again, these are important because when we start trading and we see these lines, whether they be support or resistance as this one is, or support, we call those key levels, and we need to know where they are. If we're trading too close to a key level, we want to take a different strategy. Here's an important one. You can see this price level at $0.715 to the Australian dollar. We call this a line of resistance here because price tried to break through on the upside, but could not and reversed. What's important to note, though, is that earlier, about a month ago, price tried to break through support. We very often see that lines of support and resistance can be the same thing. So a line of support here finally broke through beginning of the month and came back to test as a line of resistance. And again, I can't repeat enough how critical these lines are. When you're trading, you need to keep an eye on these. I know this is a lesson in MT4, but we'll touch on a bit of trading. Let's say, for example, we were here and somebody told us that we should go long on Aussie dollar, but a line of resistance was here just above it. It's simply a bad idea to trade long up against resistance unless it passes through. And you can see why. It hit resistance, bounced off, and continued back down. So we would have been stopped out, assuming we had a stop loss. Here, for example, price moved down, down, down. It actually passed through this line of support. So we were safe placing a trade here to go short until it got to the next line of resistance. And again, bounced off and went. So lines of support and resistance are critical in your trading every day, whether you're trading the 1 hour or the 1 minute or the 1 week. Okay, the next line we want to look at is a trend line. And you can see them right here. They're on the graphics toolbar. It says draw trend line. So all we do now is simply extend where we want this line to be drawn. So here we have a trend. And you can see it automatically snaps to the close of this candle. Or sorry, the low of this candle. Again, I can double click on this. We can see 3 different lines or 3 different little boxes appear. So I can move this now in different axes. I can move it from the lower end. I can reposition it from the upper end, or I can grab the middle and move it around completely like this. And I can do the same with an upper trend line. So from a trading standpoint, we can see that this is quite important. This trend channel, as we call it, would have provided many opportunities. And we say we want to trade with the trend. The trend is our friend. So we had a few opportunities here. When price action bounced off this trend line, it continued up. It bounced again off this trend line and continued up. Eventually broke through the trend line. And started a reversal. So when it hit resistance here, it reversed. And we can do the same thing on the way down. So here we have a downward trend. And again, we can see that we would have had many different opportunities to trade that until it broke through. Okay, again, if I want to eliminate some of these lines, I can double click and you can see the little box appears and simply hit the backspace key and they disappear. Or I can go back to my objects list on each chart and I can delete. Now I have a clean chart. And again, this would not affect the template unless I told it to. Okay, let's say we wanted to add some indicators. As we get to know more about MT4 and trading, we don't want to just trade naked charts. We can simply add indicators. So let's take a look at the moving average. Okay, in this case, I'm putting a 100 period moving average on the chart. And this is an exponential moving average, but we'll explain that in another webinar. And I wanted to color it, let's say I color it black. Okay, we'll go back to the daily chart. Let's try the 4-hour chart. Okay, so here we have a 100 period moving average on this chart. What that means is it is looking at this point here, looks at the last 100 periods of price action and gives us an average of what the price had been. So in this case, price is now down below the 100 period moving average. You may hear very often on Bloomberg and other financial news channels, they talk about the 100 and 200 period moving average when they're looking at bearish and bullish. So let's do that as well. Let's put on the 200 period, and we'll give it a different color. Let's say a red. And you can see that it's a very different line. It's similar to the 100 period, but it's much higher because it looks at 200 periods versus 100 periods. And there are a lot of ways you can use moving averages. In this case, we've got 2 on the chart. Let's go back. Let's get rid of these for now. We'll go back to the 1-hour chart, and I'm going to put some shorter moving averages on. So let's call it the 50 period. And we'll do another one, which can be the 10 period. And we'll color that one black. Okay, here we can see that we have a slow moving average and a fast moving average. And many traders use these crosses to tell them when to go short or to go long. In a case like this, we have the 10 period moving average crossing over the 50 period moving average, which may be a short signal. In this case, it was probably true because it did in fact drop for quite a while. Here we have some mixed signals though, where you had a lot of crosses to the upside and downside, and nothing happens. So you have to be careful with these things as you're using them. Let's scroll back and see if we have any other indications on Aussie dollar. Here we had quite a good one where the 50 period, in fact, we have quite a few in a row, where the 10 period crossed below the 50 period, price moved down, again, crossing up, moving down, and here's a whopper moving up. So we call this moving average crosses. So we've put 2 moving averages on our chart, and we can use this to trade it if we want, or we can look at other indicators and find other strategies. Another type of indicator is called an oscillator, and there are quite a few. So let's look at something called MACD. We won't change the parameters. And again, in a different video, in a different webinar, we will look at ways to use MACD and other oscillators. So here we're looking for oversold and overbought signals on the MACD, and we're combining them with the moving average crosses. Again, we'll look at these, how to use these in different trading videos. But let's say, for example, we really like this setup. We like using moving average crosses, and we like using the MACD. So I can simply go to my template, save template, and we can call this moving average cross MACD. So we've saved that template. Okay, so let's say we want to go to a different pair. We're on our Aussie dollar multi-time frame, so we don't want to change this profile. So let's go back to our default profile. And here we have cable. So let's say we want to put that last template on this chart. It's quite simple. We go to template, we find our moving average cross MACD and click on it, and there it is. So we can use this as often as we like. Okay, let's do another one. Let's say we wanted to start from a naked chart, but we know that our default chart is a naked chart. So let's do something with oil. So we'll launch oil. Here we have US oil on the 4-hour chart. Let's draw our trend line, because we might want to trade this later. We can see that it's trending down. We can also see that it's bounced off an upper trend line, and we're hoping that it might stay in this range. But we don't necessarily want to just simply trade on trend lines. So we'll look at something like Bollinger Bands. And we may want to use, let's say, the stochastic oscillator. Again, with both of these, don't change the settings. So here we have our chart with American crude oil, trading Bollinger Bands, and using stochastics. And if you've never used these before, you can see that they're quite valuable. You can see where, in this case, price has touched an upper Bollinger Band, stochastics have reversed, and sure enough, price in fact did reverse. If you want to try any of these indicators and strategies, do it on a demo account. You'll find that they can be quite valuable, but you also find you'll have to get used to it and used to trading different time frames and with different indicators. So let's say we want to save this as a template. So we can call this Bollinger Bands and stochastics. So we've saved that. Okay, let's say we want to do the same thing on UK oil. So keep in mind we have Bollinger Bands, stochastics, and 2 trend lines on this US oil chart. We're going to open a UK oil chart. Again, it's very similar, but Brent and WTI often trend differently, have different prices. Now we'll use the same template. So we'll put on our Bollinger Band and stochastics. But you'll notice we got exactly that. We got our Bollinger Band stochastics, but the trend line we drew did not come across. The trend lines and objects like that are not saved on templates. Only the indicators are. You will have a variety of indicators. Again, we're having another webinar in November to look at all the more details on the variety of indicators, but safe to say you have tons of them. Okay, let's start from afresh. Okay, one of the things that you may find valuable that you may not want to dig in just yet, but there are literally hundreds of indicators available on a thing called Codebase. There are literally thousands of indicators that you can use. And you may not want to get involved in these unless you're a bit more advanced at your trading, but you can find, like I say, again, literally thousands of indicators available. So if I want to, I don't even know what this is. Let's put it on. It's called the 1 Minute Scalper. We can download it. And we can find this in our Oops. We get a dialog box. We can click OK. And we'll find it in our downloads in the Navigator. I like to use a thing called Spread Indicator that I've downloaded. I'm going to show you very quickly what that does. So I can simply drag onto a chart an indicator. Okay, sorry, Spread Indicator does not seem to be working at this moment. I apologize for that. Okay, what I would like to do now is look at the types of orders you can place while trading. So we'll get a new chart window up, a new chart. Let's get rid of one-click trading. If you want to place an order, simply go to New Order. And the types of orders that we have to offer are market execution orders, which means it will place the order exactly at that very moment. You can sell on the market or you can buy on the market. Or we have a thing called a pending order. We have 4 types of pending orders. I'll show you these in a second. Buy limit, sell limit, buy stop, and sell stop. But before you place an order, it's important to understand about position size. And this will go through on a separate webinar. But what's important to note about MT4, and this is, to be honest, one of the things that we don't really like about MT4, it will give you lot sizes and goes from very small to very large without warning. So what I'd like you to do is do a bit of research before you start trading. Find the proper lot size that you're using for the size of your account and go from there. If you don't know, please start with the very smallest amount. So let's start with a very, very tiny amount, 0.01 lots. Okay, I'm going to go back to my market execution. And I'm looking at, let's see, we've got the CAD Swiss chart on the 4-hour. So let's say for whatever reason, I want to sell. So I click the sell button and I'm in the market. Okay, and that has come up with a sell line right here. You can see where price is at 0.765 Swiss francs to the Canadian dollar. So I'm in the market. And of course, I want this to go down as I've sold. I can click my trade button. It will now show me where I am. So basically, I am now down a huge amount, 0.6 Swiss francs. Okay. In the terminal, we're looking at this particular trade. It gives us some very good indications as to what's going on. When we got in, the type of trade, which is a sell, the size of the trade, what we're trading, in this case CAD Swiss, the price we got in, our stop loss, which we don't have yet, our take profit, which we don't have yet, and the price the price where we are right now, and the commission. Brokers will charge you a commission, and Valutrades does this as well for each trade that you do. So we basically take the profit on the trade, deduct the commission, and there's your net right there. Again, not a huge amount of money. But what is very, very important is that you use proper risk management. And risk management in MT4 is not difficult. There are several ways to do this. I can go back to my sell line, and when it says drag to modify, just click and drag. And it very nicely puts up a stop loss. And it's giving me a pop-up disclaimer. I accept the terms. That only happens once. There we go. We now have our stop loss. If I hover over the stop loss, it tells me exactly, it tells me where I am. I am 68 pips above my entry point, and if it hits my stop loss, I'm going to lose £5.31, which is a very small percentage of my account. I've put a stop loss above the swing high of this point of resistance. I can still draw that line of resistance. I can also go back and draw lines of support. So I'm in the market. I want price to go down on CAD Swiss. And at some point, I'd like to take profit. So I can simply go back to my sell line, drag it downwards this time. And if I'm assuming price is going to hit this line of support, the swing low, I can leave it here. I can then drag over and I can see, okay, that's 106 pips below my entry point, and I could make £8.31. Well, let's say I want to leave this trade running a little longer and I want to make a bit more money than that. I can drag it down to a much lower point, this next line of support, this next key level, and it moves all by itself. It moves the. So now we're looking at £19.42. So we have a risk of £5 and a potential profit of £19.42. If we want, we can go back and take a look at the order in more detail. So we click on Modify the Order. And here we can see we have a stop loss in price, and we have the take profit in price. And I can change that from here if I like. I can simply, let's say I want to go back to where my initial price was. So I can click on an arrow on the take profit, move it up, click Modify, and the price moved all by itself. The line moved all by itself. Okay. Let's assume that this trade has run its course and we are either stopped out or we take our profit. I'll close it now. So I've lost a tiny bit of money, but I can go to my account history and I can see that trade. So it was a sell trade. That was the size. Here was the instrument. That was the price I went in, my stop loss, my take profit, and the price I closed at. Here's the commission I paid, and here's my overall loss. Obviously, it's not a very good trade, but just for the purpose of illustration, we've seen one. Okay, we can, for example, let's do another one where we do a new order. Actually, before we do that, let's put in our lines of support and resistance. Here's a line of resistance at 89 yen, Japanese yen. We've got support right about, we've got quite a few points of support, but let's go down to the very bottom. Okay, so we can see this upper line of resistance at 89 yen and a lower line of support at 84.8 yen, and price is at 86. So let's say, hypothetically, we thought that price is going to go up. So we can place a new order. Again, I want to be very careful with my lot size. Excuse me. So let's say we go this time at 0.05. I can put a comment in the comment box. And by the way, this is the only chance you're going to get to put a comment in if you like to do these sorts of things. Okay, I want to enter the trade here, and I want my stop loss at 84.8, so I can simply type it in. And I want my take profit up here at 89 yen. So again, it's a market execution. This is a buy trade. We want to go long. And our order's been placed. We can now see we have a take profit line up here. We have a potential to make 289 pips and £100, or we can risk £45 or 131 pips. So that's roughly a 2-to-1 risk-reward ratio. Sorry. If we go back to our trade, we can see we're already in profit, a whopping 22p. You will typically find that your trades will start on the negative because you have to cover the spread. And I'll talk about that in a second. So we have one trade running in profit, which is very nice. Let's go back to our old friend, the Aussie dollar. Okay, let's say for whatever reason we thought that price was going to go up to this point of resistance. And we want to cover our loss if we have one at this line of support. But we don't want to enter the trade until we've passed through this line of resistance. So basically, we don't want to enter here because we're scared it'll hit resistance and bounce off, but we might want to enter about here. So you can see price there is 71.6. So we can do what we call a pending order. And in this case, it's called a buy stop. And buy stop means that it will pass through a line, hit what we call a stop, and then carry on. So again, we want to make sure we have the right position size. We want to enter the trade at this price, which we said was 716. We want our stop loss to be at 0.7. And our take profit is way up here at 0.73. So we place the order. Okay. And there we have it. We can actually now, because this is not a real order, we can actually tweak it. We can actually take this line and move it higher and move it around. And you can see that the stop loss and the take profit line move along with it. So let's say we wanted to tweak it a bit, move it higher. We wanted to modify our take profit, move it back down. And for whatever reason, we put the stop loss too low. That's not a problem. If you want to see what's below your chart, simply grab the price line, vertical scale, and click and drag it. Now you can see what's going on down below. So we're going to move the stop loss up to this line of support. So now on our terminal, we can see that we have two bits in the market. We have an existing order in the market, which is now sadly in loss by 12p, and we have a pending order, which is here. We can cancel that order at any time by clicking this arrow or this X, but we won't right now. Oh, I mentioned earlier that we put a comment in. We can right-click anywhere on the terminal and view comments, and there's our comment, test trade. This may be handy if you're keeping track of all your trades, if you want to make comments on them. Okay, another type of pending order. This was a stop order. So basically what we want to do, we want to see price move up through this line. It'll hit the green line. It will trigger an order, and we hope it will keep going. That's called a buy stop. A sell stop is the exact opposite. But what if we want it to enter the market in reverse? Here's what we do. Let's pick a different one. Let's say we have Aussie CAD on the 4-hour chart. Again, we put in, as good traders, our lines of support and resistance. So let's say, for example, we wanted to wait until price hit this line of resistance, and we were assuming it was going to bounce off and go back all the way down here. We wish they all did that, but let's pretend. So we go to our trading, we go to new order. Again, very important, make sure your position size is correct. Because if you get into a position with the wrong position size, you will find that you'll be in negative territory very quickly and you won't be able to get out. That's how people blow up their accounts. So be very, very careful with position size, please. go back to 0.5. So we want to go to pending order. In this case, we're calling it a buy limit. Sorry, I tell a lie. We want to be a sell limit. Because what we want to do is have this price hit this line here of resistance and then sell and have it go back. So we want price at 0.94, we'll call it. We want our stop loss somewhere higher because it's a sell, so the stop loss must be above the entry point. So we'll call this 0.96. And we want to take profit. We're very, very ambitious and we're very optimistic that it's going to go down to 0.91. We click place. We now have a pending order. And we can put it right about here. So we're hoping that price will come up, hit this line of resistance, and then reverse and go back to where we want it. So I've moved the entire thing up. Let me adjust my take profit. And again, we can see we may make 106 pounds on this account, on this trade. And I can't see my stop loss, so I'm going to drag the scale back and I'll move my stop loss a bit lower. If I want to see where that stop loss is in relation to other lines of support and resistance, I can simply go to a longer time frame. So now we've gone to the daily time frame, and now I can see the order as well. So here we have our entry point, our take profit, and our stop loss. So let's say, well, we're in the middle of a consolidation zone, so I want this stop loss to be more like support and resistance, so I can move it higher if I want. So now we have three opportunities. One, we are in a trade on CAD yen, and we have two pending orders on Aussie dollar and Aussie CAD. Okay, I think we've covered quite a lot about MT4. We've taken a grand total of 1 hour, and happy to take questions if there are any. But one thing I did promise you, I wanted to show you about MT5. So here we have MT5. You will see that it is very, very similar to MT4. The reason that MetaQuotes developed MT5 wasn't because they wanted to make something that looked different. It was because MT4 had a lot of legacy coding that really wasn't going to work in today's day and age with multi-asset trading and what the brokers wanted. So they created MT5. It's a completely different system, completely different coding, but it looks almost identical to the trader, which is very, very good. If you're making the switch from MT4 to MT5, there really won't be much to worry about. You have all the different indicators, you have all the same time frames, your market watch is the same, and your navigator is the same. And basically the terminal is the same. You can do on MT4 and MT5 if you want, you can move your navigator and have it floating. Some people like this because they want to see the entirety of their market watch. You can actually get rid of the navigator. If you want to bring it back, simply go to View, Navigator, and it's back. I can drag it back where I found it. Okay. Anytime you lose something, you can go to View and find it again. So terminal in MT4 is called Toolbox in MT5, but it's basically the same thing. One of the things that I really like about MT5 is this hidden gem. If I go to Insert, Objects, Graphical, and as you can see, it's very well hidden, Chart. I can have a chart within a chart. And I think this is a very awesome feature, and I'll show you why. If I'm trading on, in this case, I'm trading gold on the 30-minute chart, and I actually was today. So I want to, let's see, I'll draw my trend line. And I'm seeing that gold is on a downtrend, so I want to trade off that trend line. But let's say I want to see that, I want to take a look at the overall trend of gold. I can have this little chart inside, go to properties, and I can change the parameters. So let's say I want to see this on the daily chart. Okay, here I have, here I have gold on the daily chart. I can leave this here. I can move it by clicking on the corner. I can have the daily chart here all the time, and I can scroll through my other time frames as I want. And I will always have the gold daily chart available. And I just find this a very handy feature. So if you're looking at, if you like to use multiple time frames, which you should, you can have little tiny charts on the on MT5. And they're quite flexible as well. Let's do another one. Oops. Let's find it again. See, I said it's very well hidden. Don't know why they've done this. So I'm going to change this to, let's see, I don't know, how about an hourly chart? Okay, so if I'm trading, let's say, the 5-minute chart on gold, and I want to see what the overall picture is on the daily chart and the current trend on the hourly chart, I can see it. And I'm very happy that the hourly chart shows me a downward trend, and I'm trading the 5-minute chart on gold on also a downward trend. So as we say, the trend is your friend. So I'm hoping that it will bounce off this trend line, and I'll be able to sell short on gold. For all intents and purposes, for the trader, MT5 and MT4 are, again, very similar. There are a few neat features, but again, this is my favorite feature, the charts within a chart. Okay, are there any questions? Anything that you would like to know about MT4 that I've missed or I've gone too fast or we'd like to go over again? Okay, Harry is asking, why is low spread so important for my trading direction? It's because it depends on what you're doing. If you're scalping, then spread is critically important. If you're trading on the longer time frames, then spread is simply less important. And I'm glad you brought this up. Let's take a look. I'm going to show you something pretty cool. Again, if you're a new trader, I do not recommend you trade the 1-minute charts. And I'm just showing this you for illustration. Remember we went through earlier and set up the colors of the chart. If you go to common, right click and go to properties and common, show ask line. Okay, now you can see two lines. One is the bid line, one is the ask line. So basically, if you enter a trade one way or the other, it doesn't matter which broker it is, you will get the worst price, either the lower or the higher price. So basically, when you start a trade, your spread you're in the negative because you're trying to beat the spread. If you are scalping, that is doing very quick trades over seconds or minutes, it can be a struggle to beat the spread. If you're on a pair like euro dollar, the spread is always generally very low, so there's less to worry about. I'm going to try my spread indicator again. Here we go. Okay, now our spread indicator has appeared. This little indicator that I showed you earlier is showing us that the spread between a euro dollar is basically 0.4 pips, which is very low. Let's take a different pair, CAD yen, drag it onto the chart. So we want to replace this chart with a CAD yen chart just by dragging it on. And we can see the spread is quite different. It's actually 1 pip, and you can see the line is a bit fatter. So basically, to answer your question, Liam, spread's important if you are scalping and you're struggling to beat the spread. If you're trading longer time frames, then it's really not an issue. Liam's also asking, why do you think 99% of traders use candlesticks? It's just easy for me. It's just easier to see. If we go back, let's zoom in a bit. The bars tell us the exact same story, but for me, they're a little harder to read. You've got the open price, the high, the low, the close price, and the candle gives you the exact same information. Line charts are based on the close of each time period. Let me just, I can't change the color. And they can be valuable for stock traders when they're looking at trends, but again, they give you much less information. One of the things we'll discover in later webinars is using candlestick patterns to determine trend continuations, consolidation, or reversals. So there's just so much information in candles. Okay, Peter is asking the main difference between profiles and template. Very good question. A template is what we're putting onto the chart. Let's just do that right now. So we have quite a few templates available. A lot of these are put here by MetaQuotes. So let's go back to the one that we created earlier, Bollinger Bands and Stochastics. So basically, I'm saying that I want this template to show me Bollinger Bands and Stochastics on whatever chart I choose. That has nothing to do with a profile. A profile is basically a group of charts. So if I then want to go back to my $CAD multi-time frame, we can see down below that it's given us the $CAD multi-time frame. And I click on my tile, so I've got two $CAD charts. One is 4-hour and one is daily. It just so happens by accident that these two had Bollinger Bands and Stochastics on them, but that's the difference. I hope that's clear. So templates are basically saving your groups of indicators and configuration. Profiles are looking at groups of charts. So if I want to, for example, multi-time frame we talked about, let's say I want to look at only dollar. So I go to my profile, US dollar majors, and I've got that there. Individually, I can change the templates on each chart, as we did earlier. Okay. Okay, looking at different questions. Okay, Anna's asking, how can I have more than 10 charts open on my platform? You can have as many charts as you want on your platform. In fact, just as a laugh one day, we tried to put charts on a 65-inch 4K monitor, and we got literally hundreds of them. We ran out of time, basically. So you can put as many charts onto MT4 as you can read. I mean, it may not be that valuable to you, but let's do it. Let's just randomly put charts on. I'm going to go click. Okay. Okay, now you can see the tabs across the bottom. We have lots and lots of charts. And if I click tile, so here we have there's 10 charts, just as you wanted. Okay, these become less valuable as your real estate diminishes. So it's very difficult to read this chart. As you can see, it's all squashed here. So let's get rid of one chart and rearrange. The other way to do it, let's say for whatever reason I've got a profile and I'm watching all these different charts, but I want to take a look at this €1 chart. I can easily grab it, make it bigger, do my study, make my trade, whatever I want to do. Let's say I want to draw a trend line. Very nice, and I can put it back where it was. Okay, again, charting is very easy with MT4. And again, we showed you earlier, let's say I want, for whatever reason, I want my Euro-Aussie chart to be on the top left, so I drag it over here, And there it is. Okay, and again, I can get rid of one-click trading. Okay, Lauren's asking the question, can we talk about risk management in the next webinar? Of course we can. That's critically important. I think we touched on it a little bit in this webinar. Your stop loss is one of the most critical things combined with your position size. So in the next webinar, we're going to dwell on stop losses and position sizes. And Anna's asking, how do I cancel a pending order? That's really, really easy. We just happen to have here 2 pending orders. X, they're gone. They're both gone. So now we have left is a loss of 34p on our existing trade. Okay, Phil is asking how can I add an ask line? I've done that. So you were ahead of me, Phil. So we've added an ask line to the chart. Let's take a look at that again. On the 4-hour chart, we probably won't see it. In fact, I'd be amazed if we saw it, especially on euro dollar. If I go down to the 1 hour or the 1 minute chart, the 1 minute time frame, we can now see we have a clear gap in the spread. Okay, Grace is asking a similar question about the spread. Where can I download the spread indicator? Right. If I go to Codebase, and again, there are thousands of these indicators available. And here's how I find it when I open a new chart. I click on name, so I put them in alphabetical order. Then I scroll down to S, spread indicator. You can right click and click download. And it will appear here. So basically it appears in your downloads folder under indicators in your Navigator. So again, I can, oops. So I've got multiple screens here. It gives you an indication where you have to click OK to make it go. Okay, so now we have 22 points of spread on Euro Aussie. Okay, there was a question also from Grace. Why is the spread indicator showing points? Okay, that's a good one. And the reason is, in the good old days, we talked about pips, and we could spend hours talking about pips and points. Not long ago, everything was done in 4 figures. So here we have a price, for example, where my cursor is of Aussie dollar 15987. So it was easy to look at pips. So 887 would be the pips. The industry in the last few years has gone to 5 decimal places. So unfortunately, when I click on the crosshairs and I see the indication in this, the center figure is 54, that's actually 5.4 pips. Don't worry if you say you're confused. Everybody gets confused. And in fact, to be honest, I'm not even sure if there's an industry standard between points and pips. I say pips as the 1/1000th of a point of the price, and I say points as the 1/10,000th. Again, it's different with yen. That's a topic for a different webinar, sadly. Okay, Grace is asking, do we think a beginning trader needs to focus on a lot of products or focus on one? Focusing on a few is very, very good. A lot of beginning traders will look at a lot of different pairs and get in over their heads. It's far more important to study and learn about one pair because different pairs will behave differently. Euro dollar may behave very differently than pound yen. I mean, I do know professional traders who only trade one pair. Some people love Aussie dollar, some people love pound yen. Others say, no, I don't like it because the spread's no good. There's a temptation when we see all these different beautiful symbols put on by Valutrades that we should trade them all. I highly recommend not doing that. Get to know a few things before you jump in. There's nothing wrong with having a variety. Like if you want to trade the DAX and you want to trade gold or you want to trade euro dollar, you will get to know over time how they react and what makes them tick, basically. So to answer your question, don't trade too many. Otherwise, you may get confused. Okay, Anna's asking, what is your opinion to trade during markets like the U.S. non-farm payrolls? Okay, the U.S. non-farm payroll, like any news event, can be an opportunity. It can also be highly dangerous, and here's why. I like to trade news events. In fact, I make some money trading news events, but I'm very careful about them. I study them. I want to know what sort of reaction will cause a certain reaction to the price. I also want to know if the news is severely bad, if price is going to reverse or carry on, and I study them very carefully. The way I trade news events, and let's look at a chart right now. Let's go to not Euro Aussie. Let's do something else. Dollar CAD. Whoops. So let's say, for example, I've got a 4-hour chart and we clearly have an uptrend on dollar CAD. And there's a news event coming up. What I want to see out of this news event, I want to see price go in the opposite direction of the trend. So for example, we've determined now that we've got an upward trend on dollar CAD. So I'll go to the 1-minute chart where I'm going to trade the news. Even though this 1-minute chart is showing a downtrend, I know the general trend is going up. So what I want to see price, the news, drive price down. Then I can take advantage of a reversal and get back in the trend. And the reason that works is because the big banks and the hedge funds and so forth who drive the market, they will have orders sitting there waiting. And if they see price go down or price go in the opposite direction of the trend, that to them is a buying opportunity or selling opportunity, and they'll take advantage because it's a bargain. If price continues in the same direction as the trend, I tend not to trade it. If the news is quite severe, I tend not to trade that either because it could keep going and blow up your account and do nasty things. Specifically on the non-farm payrolls, there's a problem with that, is that in London, we're based in London, people are trading all over the world. The big banks have closed up shop for the day by the time the non-farm payrolls comes out on Friday afternoon, the first Friday of every month. So there's very little liquidity. And a lot of the Asian banks, they may have gone for the weekend, and the American banks, they will typically not get involved because the non-farm payrolls are so volatile. So trying to guess what's going to happen after the non-farm payrolls can be very difficult. There are times when price will reverse back and forth and you can take some scalps. But it is like any news event, it creates opportunities. But with lack of liquidity, the spreads get very wide and it can be dangerous. So it's a good question. I do try to trade the non-farm payrolls, but I often just don't bother because it's just not worth it sometimes. Okay, Paula is asking, how can I hedge a position? Not always a good idea, but if you do have to hedge a position, you can simply, if you've got a buy trade that you want to hedge, you simply make a sell trade in the opposite direction and hopefully at the same position size. What a lot of people have done to blow up their accounts is not have proper risk management, get into a trade that's going the wrong way and they're running into a very negative territory, and they decide to hedge the trade hoping it will come back. And what I've seen people do, I've seen students do this, where they hedge the trade with a larger position size to try and make up for the loss they've incurred on the first trade, and they end up blowing their accounts. So if you want to learn about hedging, I would say study it, but I would rather that people, beginning traders, learn more risk management than about hedging. I'm not discouraging it, but you really need to know what you're doing if you want to hedge a position. It's probably not the answer you wanted, Paula, but that's my opinion. Okay, if you have, Lauren's asking a good question, and it's a very good question. If I want to close a position partially, you can actually do that on MT4. Okay, you simply right-click on the order that you want to close partially, select Modify or Delete Order, and make sure you're on the order ticket on Market Execution. Look at the amount of your volume and let's say take half, so 0.6 goes down to 0.3, and then click on the close 0.3, and then you've taken off half your position. It's quite simple. If we go to our account history, we can scroll down and see that we have actually closed that position. So we've made a tiny profit on that trade, and half the trade is still running. There we go. Hope that answers your question. Okay, well hopefully that's been valuable to everyone. We have no more questions, so I guess we're going to wrap up. Thank you very much. And again, next month we'll be doing a webinar with more detailed information on MT4 with indicators, risk management, and position sizes. And thank you everyone for joining us.